Welcome to Taxed and Confused, the podcast where tax administration meets real talk. We are your hosts, Lizzie and Lisa, two tax nerds on a mission to decode the rules, demystify the system, and maybe even make you laugh along the way. From tax returns to objections and everything in between, we're diving into the world where the burden of proof is on you, not the ATO. That's right, this isn't criminal law. In tax, you're guilty until proven compliant. But just a quick heads up, this podcast is for educational purposes only. It's not tax advice, and it's definitely not a substitute for professional guidance tailored to your situation. So brace for bureaucracy and join us as we explore the weird, the wonky, and the wildly important world of tax admin. Because when it comes to tax, we're all a little taxed and confused. So welcome, Lisa, to another fabulous episode. Today we are breaking down Second Commissioner Kirsten Fisher's speech to the IPA National Congress that was held in late 2025. So are you ready to roll and explore what we have seen through the eyes of the ATO?
Absolutely, Lizzie. And I was in the audience, and we were in the beautiful, beautiful surrounds of Hamo, as they call it, Hamilton Island.
Oh, that's so beautiful. I'm so jealous.
Oh, it was lovely. It was actually lovely. But from look, you live in Ballarat, which is probably one of the coldest places apart from Canberra. And I'm in Melbourne. And I tell you what, it was very humid and very uncomfortable up there in November. But what's interesting about this speech is that Kirsten's delivered it to a number of different formats. It's all online. One great thing about all ATO speeches and pretty much all APS, public servant speeches and parliament speeches, they all go online pretty much quickly, so you can actually read them as well. And they just read their speech. No inflection, no laughs, no gags, no getting sidetracked. They're not like a TED talk where people can go down rabbit holes. This is what we've got. So we listened to Kirsten give our little speech to us, which was really nice. So she gave it to a whole field of tax agents and tax accountants and members of the Institute of Public Accountants, which is one of the three accounting bodies in this country.
So we will have in the link to the speech in the show notes, but and obviously in this episode we might go down some rabbit holes, but I'll
embellish it. I'll
listeners
do it.
beware. So let's get started though, because some of the listeners might actually not know who is Kirsten Fish. So can you give a little bit of insight to the listeners about who she actually is?
Oh, she's the second commissioner. And she looks after the area of law design and practice group. So she's the second commissioner, which is sort of 2IC to Rob Heffernan, the commissioner. Okay, so the second commissioner is sort of, if you think of the president or the chairman of the board is Rob, and then you've got Kirsten, who's like the vice president, and you have multiple vice presidents. So she looks after law design and practice group. So she is a lawyer, a solicitor. She's worked for, you'd have to look her up. In the show notes, we'll put her LinkedIn profile up as well. But she's worked for one of the big law firms. Okay, so she is different to you and I, who are accountants that do tax. She's a law person. So she's really, really technical. And she'll be looking at one word and, she'll write pages and pages of discussion on what one word means. Where we just go, just tell us the interpretation, how do we apply it and put a number to it, yeah? So that's what she does. So in her group, I've just looked it up. So in her group, she's got policy analysis and legislation, and there's a deputy commissioner under her that looks after that called Will Day. And then there's another section, objections and review, and Andrew Orm's the deputy commissioner over that. But Andrew Orm might be a name that we can talk about as well, because he has just been appointed head of the Tax Practitioners Board. Because it's really important to know as well that the Tax Practitioners Board are all staffed by ATO employees. So Andrew's moved over to that. And then the other areas in this part is litigation and legal services, and Rebecca Sate looks after that. So that's the whole silo that Kirsten looks after as second commissioner.
Wow. So just a quick question. How many second commissioners are there?
Oh, you've heard me say this before. I think it's funny. We should call them third commissioners because there's three of them. There's three second commissioners. So, and the one that people probably, they might not know Kirsten as well, I think, if people are tax agents and know about tax, because the one that you see pretty much in any sort of forum most of the time is Jeremy Hershorn. And Jeremy's ex-partner at KPMG, and he's the second commissioner of Compliance and Engagement Group. So normally, if Rob's gone to Senate estimates or something like that, he usually takes Jeremy along sometimes, you know, as his wingman to answer those sort of things, because most of the time the senators in estimates are talking about administration stuff and compliance stuff. And so that's Jeremy that looks after that. And then there's a second commissioner. I love saying that. Who's the second commissioner? I'm looking at my notes now. I'm trying to find the second commissioner. I knew who it was in a minute. Let me have a look. I've got the organogram up because it's usually those two that I know.
And we'll put the organisational chart in the show notes as well, so everyone can have a little bit of a snoop to understand how the ATO is actually structured.
I'm trying to find it. Can you find it? I'm looking for it now.
So we've got Jeremy Hershorn. We've got Kirsten.
Oh, yes, and David Allen. I found it. Yes, David Allen. I finally found it. So he's Frontline Operationals Group. Yes, and David Allen, who's the second commissioner. And when we hear presentations being delivered by these commissioners, we've usually got Rob as the commissioner. We'll do it. Or the 3 second commissioners, and then underneath them are deputy commissioners. So that's sort of the structure of how the ATO is structured.
Yeah. All right. Well, that's a good kind of background or understanding of the structure of that kind of core group. So let's get back to the speech that Kirsten Fish presented. So let's break it down and let's just step through a lot of the elements that were covered off in that particular speech. So what did Kirsten Fish tell us about the state of the Australian tax system?
Yeah, so the data that she's got is from 2023, Lizzie. So there's always a time lag. And one of the key elements that was really coming through in her speech in totality was going digital, right? Everything, and digital means real time. Okay, so there's going to be more real time data coming in, but at the moment we've always got a lag. Because think about when we do a tax return, you know, we're using historical data, you know, the difference between doing financial accounts and management accounts or doing forecasting. You know, we're very much looking at historical data, so there's a time lag. So we're looking at collectability. You'll hear a lot about, you know, let's think about it. What does the ATO do? It is the police officers of our tax system, as we know. It's upholding our tax laws, but it's also collecting the data. It's collecting all consolidated revenue so we can build schools and roads and hospitals and submarines and those sort of things, right? I always throw the submarines on at the end because it's quite topical. But what's interesting is how robust our tax system is and how much collectible they do. Because that's really what we're doing. You know, if tax is what we pay for a civilized society, how much tax are we collecting? You know, are we Robin Hooding, you know, taking from the rich and giving to the poor, which is sort of how our tax system works, if you want to put it that way. So what we've got is they think in 2023, based on their best estimates, is they're collecting about 93% of the theoretical tax payable.
Wow.
And remember, we're self-assessment. We've covered that in previous discussions as well.
So that's pretty good. That's not too bad.
But I always think those numbers are a little bit, well, do we really know sort of thing?
What's the methodology behind it? How are they determining?
Yeah, you know, from your research point of view, like how are we putting together, you know, what are our assumptions and what's our strategy and things like that? And we're self-assessing, as we know. So we're saying, are we compliant? Because remember, we pay tax in general, especially income tax. We pay on lodgement. So we've got a lodge to pay. You know, even with GST, we've got a lodge to pay. Even with withholding from salary and wages, we have to lodge to pay. We just don't pay into a bank account and hope for the best. So it's always the compliance history of what we're looking at. So we're saying we're lodging a tax return. Then we're saying, how many are then paid on time? So they're saying to lodge in total from 2023, we're saying 94% are lodging tax returns.
Mm-hmm.
And with a bit of prompting, so some are a bit late, they're saying greater than 90% compliance once there's a bit of prompting.
Yeah, yeah.
Okay? So that's in most sectors.
So that might be like a letter to the client to say, hey, look, we've noticed blah.
Maybe. Or it just could be, I've got to get my tax return in, I'll finally do it. Or, some of my clients will be, Lisa, I'm trying to get some money out of Services Australia. Can you lodge my tax return because I need it to be able to trigger stuff? It's all those sort of things. So it could be a prompt saying, hey, you've forgotten to lodge, or it could be anything else. So they're saying that, 96% compliance is pretty good.
Yeah,
I think that's really high, Lizzie. And I do think that. Now, this is for everyone.
Mm-hmm.
Now, for individuals not in business, so we're talking about our common garden variety, the people that we use My Tax or something like that, we're saying 94% are compliant.
Oh, so it's slightly higher.
Yeah, so we're saying that was pretty good, right? And they're just saying, they're in effect saying that our tax system is pretty good and pretty robust. And I think, though, it's the structure of our tax system. If we want to look further into this, and I'm going to read in from my experience, for your common garden variety individual taxpayers, our system works where people are expecting a refund. So our whole withholding system works around the ATO take tax first. So it encourages you to lodge so you can get a bit of a refund back.
Yeah,
you see what I'm saying? So I think it's the structure of our tax system.
Yeah.
Now, as we know, in the UK, for a lot of really simple tax returns, they have a no lodge tax return. Just simple salary and wages, we don't even have to lodge.
Yeah, yeah. And that's a little bit like in New Zealand
right?
as well.
Immigration into Australia with the UK people go, oh, what? I have to lodge a tax return? Right? And I think we're moving towards that. Some of the discussion about a standard deduction and things like that, I'm going, this is starting to smell like your common garden variety tax returns are just going to happen. Tax just happens.
Yeah.
But the big part, and this is the real focus, and I think this is the reason that Kirsten's delivering these speeches, just not to the IPA, but also to other associations and other academic institutes, is small business. Small business has got the biggest challenge completely.
Okay,
right?
So they're not as compliant? Are we not seeing as good statistics coming through?
and we're seeing a lot of issues with that.
Yeah.
Okay, so I think that the reason that the speech was given to the Institute of Public Accountants, which most of those members are looking after the small business area, she's preaching to the converted going, yeah, we need you guys to help us keep the small businesses compliant. So it should have been a bit of a encouragement for us, but all it was just a bit more of a frustration that was coming through on this delivery of this speech to us, for the very reason that there's what, 20,000 employees in the ATO, and the second commissioner talking to us, to IC, and like, that's great. We can talk to her. She came to Hamilton Island. She didn't have any minders. Most of the time with public servants of that level, they have a few people and assistants and things like that, like the politicians do, to look after them, like a chief of staff. She came by herself, which I thought was really great. It means that she was quite self-sufficient. That's probably because she's the only female second commissioner. We won't go there. We won't play the sexist card, but I will. I just said it. And what I'm saying as well is that when we talk to people, in other words, us tax practitioners talk to people in the ATO, we're talking to people on the phone line. So there's a big gap between those two levels, Lizzie.
Yeah.
And that's what was getting us a bit frustrated, because we think we're the ATO's biggest asset for small business. We're the one, we're not trying to rip anyone off. We're trying to definitely deliver the right tax compliance for small business.
Yeah, fair enough. So can you tell us a little bit more about what she spoke about with that small business performance and the tax gap?
Yeah, tax gap's always a funny discussion, but let's just have a look at it. So in small businesses, we're looking about nearly 5 million entities that are considered small business. And remember, that's in any sort of entity. We're talking about small business. We're not talking about companies. It could be trust. It could be individual with an ABN, right? We're talking about all those different entities, even partnerships, okay? And they employ about 7.3 million people, okay? So that's a pretty, as we always say, small business is the biggest employer, right, in general. And there's about $900 billion worth of income from there.
Wow.
So that's a lot, isn't it?
Yeah, that's a huge amount. So we're talking big dollar figures here. So the consequences for compliance is actually quite significant too.
Absolutely, because you think about all those touch points for tax as well, Lizzie, with that. You're looking at the income tax on the taxable income. You're looking at the withholding on the salary and wages.
Yep.
And you're looking at the GST.
GST, yep.
Right. So the small business tax gap is the largest component of what we consider to be the tax gap.
Wow.
47% of the tax gap is because of small business.
Wow. So we're just going back before. So it was about above 90% overall was doing the right thing. But if we look to the gap for small businesses, 47%. So that's going to be making a huge dent in that compliance space there just alone.
Yeah, and what is the tax gap? You got to think about what is the tax gap. It's sort of like from what gets lodged versus what should be lodged. And so how do we know what isn't there?
Yeah.
And that's a really hard number to come across. It's like the ATO have got a great amount of data. We know this. We get to see a small minutiae of it as tax agents, that they give us a little bit of the information that they've got to share with us, but they've got so much more data than that. Okay, so what they do is, and they know, let's just talk about cashies, the black economy. They know what businesses are more likely to have cashies, and that's where they sort of start developing what they think the tax gap is.
Yeah.
They look at businesses that are more likely to deal in cash, and they go, well, you might put X in as your taxable income. It should be X times 0.3 or X times 0.5 or 0.8 or whatever, which is your tax gap. And that's what they're dealing with. So they're looking at really good complying businesses and saying, that's your cashy reporting. And then they look at non-complying business and goes, well, you're not reporting any cashies, but Joe Blow next door is. And so again, is that Australian to dob someone in, as the saying goes? Well, you go, it's just leveling the playing field.
Yeah.
And everyone should be paying the right amount of tax, as Mr. Packer always says.
That's it. And the ATO have been producing small business benchmarks for years and years, and looking into the issues pertaining to small business activity and cash economy and such. And it kind of goes to a little bit of a tangent here, but again, the onus being on those small businesses to show that they're actually, or evidence that they're actually doing the right thing. So when the ATO are coming up with these figures and they're auditing small businesses, it is up to the small business to justify, for example, that they it is appropriate for them to fall outside of those small business benchmarks because of X, Y, and Z. There might have been something very local, very problematic that occurred in that space, or the particular environment at the time eroded that ability to fit within the benchmarks. But it goes to that same kind of, we talk about it, I think, with every episode, that evidencing and the onus on the small businesses or the taxpayers to actually justify what they're doing. And that's contrasted with the ATO, that they've got this data, they have these methodologies, but ultimately they can audit, they can assess those taxpayers with higher obligations, and it's for that taxpayer to then justify that it isn't the case. So we've got to remember that real kind of critical element there about the onus being on the taxpayer here, including the small business. So looking at this stats alone highlights, well, the small businesses have got a lot of work to do to perhaps close that gap and kind of show that evidence of what they're why perhaps they're not meeting that point, or do we need to examine more closely, or do we need to critique the methodology of the ATO's tax gap methodology in the first place? There's a little bit of a double-edged sword there about, well,
Absolutely.
how much question. We've got to remember that the commissioner's got a lot of power. It's one of the most powerful people in Australia. And so being mindful of, that power and the accountability there as well. It's a tricky place to be in, and a very unique position to be in.
Yeah, exactly. So let's just look at a bit more. Let's break down the stats a little bit more. So they're saying the income tax gap, about 15% in small business.
Wow.
The GST gap, though, is the phenomenal one, right? Because remember, the GST, it's no one's money apart from the government's.
Yeah.
Because if you're not registered for GST, you don't need to collect the 10%. See what I'm saying? So it's sort of like that 10% is no one's money apart from the government. So they're really aggressive at collecting that. But the GST gap is $8.1 billion, and more than 50% of that is small business.
And there's been a lot of airtime on the GST side of things, and a lot of concern about the digitalisation making the systems easier to be compliant, but that opening up risks of easy access to essentially what is government money.
Well, exactly. And that's what we're seeing with like Project Protego and all those sort of things as well. It's very easy I shouldn't say very easy. It seems to be relatively straightforward to scam, or it has been, to scam the GST refund system. And that really worries me as well. And the other big stat that comes with small business that is really critical, and why the emphasis is on small businesses being a challenge, is that small businesses owe nearly $36 billion in collectible debt. So by that, it means that the compliance has been lodged, but the debt hasn't been paid. And that's 66% of ATO debt, right? You're looking at we're not talking about the BHPs and all that of the world. We're talking about small businesses being 66% of the collectible debt, which means it's on foot. And by collectible, we mean there's no discussion that it's wrong or whatever. You've lodged some compliance document, BAS or tax return, and you've got to pay it.
Yeah. And so that perhaps indicates, or maybe, one of the reasons could be, is the businesses are spending that money, or they've got competing obligations. We're dealing with cost of living challenges at the moment, difficult commercial conditions, but raises some real concerns over the debts that are actually on the books here, that small businesses are particularly highlighted here in these statistics.
Yeah, and remember, to me, and as I explain to my clients, tax is cash flow. And so what it is, they're struggling with cash flow as well. And the interesting stats that I was discovering as well, that's starting to come through now that interest charges charged by the ATO, so general interest charge and shortfall interest charge, are now no longer deductible. The data's coming through that small business debt is not reducing, it's actually going up.
Yeah, wow.
So the non-deductibility of that debt isn't any motivation for small business to try and pay it off quicker. So you think about that from a small business employing a lot of people and the whole economy and inflation and everything like that, Lizzie, kind of way as well. We're saying that small businesses are struggling. That's what that indicator is telling me, definitely.
Yeah. And we've got to remember here that tax is ultimately connected with society as a whole, how community operate, how, we run our life every day. Tax is touching all of that in a sense. And we've got to be really mindful that if we've got problems being evidenced here in these stats, it's probably symptoms of kind of bigger issues going on underneath, but doesn't mean that there's not some probably egregious behavior going on as well, but there's obviously some issues there that need to be tackled moving forward, and perhaps the ATO are obviously looking at that closely, because those stats, I think, are from the 2023 year as well. So we're it's a couple of years down the line now, so they're probably growing. As we've seen interest rates rise, we've seen, things get tighter and harder. So it'll be interesting to see the next round of stats coming through. So what what's Kirsten Fish indicated to be the drivers of the small business tax gap? So we've broken down what the gap is made up of, but are there particular drivers that they've indicated are creating this gap? So what are we doing perhaps wrong in this space?
And this is all based on their data.
Mm.
So we're not sure exactly what assumptions and assertions they've made, but this is what they're saying. Omitted income is 67% of that.
Oh,
So
wow.
how do they determine that, right? Omitted income, that's how do they determining that? There's a concept in our administration called the asset betterment test. And it's what the ATO look at taxpayers' lifestyles and then look at their taxable income and go, how do you afford that? Right. And so that's where they're trying to work out omitted income. Again, if someone says to me, Lisa, I banked my cashies, what do I do with them? And I said, well, you put them into assessable income under 6-5, that's the only option you've got, and that's what you have to do. And then 25% is overclaim deductions. So they're being a bit egregious, overclaiming their deductions. Now, we don't know how that's broken down. Sorry,
that's okay. I was just going to say, well, you're right, we're not quite sure of the breakdown of that, but I can imagine one obvious example would be the private versus business percentages. So apportioning expenses to the extent that they are deductible and only claiming that amount and not claiming private proportions, or perhaps expenses that are not deductible at all being included there. Maybe they're specifically denied.
And the other thing that I see that overlay, even though we haven't got the information, is I look at FBT compliance as well. It's that interaction, that private component, as you said. And then I go, are they actually understanding the FBT obligations? Because remember, FBT isn't designed as a revenue generator. It's a stick tax. It's a sin tax, right? It's to stop people from doing things. To stop businesses from paying employees in kind instead of in cash, because if it's in cash, I mean by salary and wages, as a proper remuneration, as in money remunerated, it's visible, right? So it's those sort of things. So I think that could come into play as well. And the final one, which is 7%, is operating outside the system. So that's where your cashies actually come in, and non-registration and non-lodgement. So only 7%, they're saying, businesses applied for an ABN, they've never lodged anything, they think there's only 7%. But to me, that's the rubberiest of them all. It's very hard. If someone's off-grid, it's really hard to work out what your tax gap totally off-grid is.
And there'd be a lot of issues about whether activity is a hobby versus business too. There's a lot of grey area there, I can imagine, particularly in these contemporary times where we've got a lot of more unique and interesting activities going on that can generate income earning. So, there's a lot of, influencers, for example. I imagine there's a very grey rule of, in there about whether they may be hobby versus business type activities and being captured or not. But so omitted income is the biggest one. So perhaps not declaring maybe those crypto activities, or perhaps income from rental properties or things like that. What other kind of examples?
The other things is just things that are just going straight into director, something that's getting banked directly into a director's loan or a beneficiary loan and things like that. So things that, as I try and look at when I'm analysing clients' books, is things that go through the balance sheet and haven't actually gone to the P&L, Lizzie. I always look at that, because remember, when we do a tax rec, we pick up the profit before tax and then go from there. But where are you going to hide things? You're going to hide things going balance sheet to balance sheet, debits and credits across the balance sheet.
And so for those small businesses, for overclaiming deductions, it could be things being put in repairs that perhaps are capital in nature and things like that. So, so that's for the small businesses. Wow. So those are the drivers that are really quite fascinating, that spread. So moving on, are there any areas that the ATO are therefore focusing on in light of this data?
Yeah, and I think they're getting better and better at trying to pick up this non-declaring of income, because we have these TPARs, we have the payment reports for specialist areas, and they're always ones that are a bit cashy related. But the ones that they're now focusing on, because we've got to put TPARs, as we call it, in for, the cleaners and those sort of things that are very much orientated that way. But ride sourcing. So we're looking at now the gig economy. And it's really, and they're really concentrating on the GST registration for it.
Yeah.
Because remember that ride sourcing, if you're moving people, you consider it a taxi service, and you have to be registered from the first dollar for GST, right? Where if you're moving food around, you've got your $75,000 threshold, if I can put it that way.
Yeah.
And the other way that individual ABN holders get caught as well is that, remember, as an individual, you have one ABN. If you're running a business in different entities, you've got a company for this, a company for that, they're all separate entities. But if you're running it as an individual, you've got one ABN. So say you've decided to start a dog grooming business, and then you're going to make cupcakes. That's two businesses. They're all on the same ABN, and they're all under the 75,000 GST threshold. If all of a sudden you start to ride share, moving people, you've got to be registered for GST. And guess what? That dog grooming business and your cupcake business then fall into the GST regime. And it's interesting how that works, because as an individual, you've only got one ABN because there's only one you. Yeah. So that's where I think they get themselves into a little bit of mischief with that. So that's one big thing. And the other one is contractors. The old employee contractor dichotomy, and what are we going to do there? That's very much involving and TPAR matching, right? So tax payment report matching is very much there. And the other one that they're really highlighting is property and construction. And you look at it and go, that is a really big area, but what's one of our biggest problems in Australia at the moment? Not enough housing. So they're targeting the people that are going to build the housing. So that's a really big area. Again, sales, inflated expenses, GST. If you do if you flip your property or you build in someone's backyard, are you an enterprise? Yeah, you probably are in your GST, So there's a lot of things in that property and construction that they're really starting to focus in on as well.
Before we move on, though, just for those that are listening that may not know what a TPRS is, did you want to just quickly clarify what those tax reports are?
Okay, so for a number of industries, and it's all based on your business industry code, cleaning, contractors, security, there's a few of them there. We can put it in the show notes, the link to it, that if you're in business and you engage that party, when you do the payment summaries for your employees, you also have to do a taxable reporting schedule form that goes in with that. Okay, so it's if you're engaging. So what it is they've given you an invoice, you've paid it, it's an ABN, it's all fine, it's deductible for the business under 8-1, but because the ATO want to make sure that that's a vulnerable industry that could potentially would be omitting income, you then put in, it's a bit like a payment summary as a salary employees, as a salary and wage employee, that then goes into the ATO to say, hey, go look in that person's tax return for this amount of money that I've paid them. Now, from my point of view, it's always hard to reconcile, because if you're looking after the business that receives the TPAR, that's mixed up with all different income. So I've then got to go and reconcile the TPAR against their whole income for the year, because it's only business to business that'll be reported for. What happens if they do business to consumer? That's not going to get reported. So it's one of those sort of things that happen. So it's, again, there's a lot of things in our tax system where it's data matched, and this is another one. And this is internally data matched that's generated from the system itself. Remember, the ATO also go to all the banks, all the crypto exchanges, all the ride-sharing companies, you name it, to bring all that data in, all the stocks, your dividends, your property transfer, all the PEXA stuff comes in as well. So they've got a huge amount of data that's coming in, but this is one that's generated.
Yeah, no, fair enough. So moving on, just and we'll include that in the show notes as well. Let's talk about Kirsten Fisher's what she described as the Getting It Right campaign that the ATO has. Did you want to just quickly explain what that one is?
Yeah, now we've got to look at it from this way. We've got so many taxpayers that lodge tax returns, right? It's a self-assessment system. There's 20,000 employees at the ATO. It's very much they cannot audit everyone, right? It's as simple as it is. So there's always messaging coming out, especially at tax time, to say, hey, we're going to focus on this area. And it's a bit of a nudge, isn't it, Lizzie? That's what they're doing. They're nudging us to do the right thing. They're going, oh, it's purely about risk. Can you sleep well at night? Will it pass your sleep test? You've got to look at it and go, I'm going to do everything right because I'm a good citizen. I'm going to pay the right amount of tax and I'm going to do those things. But of course, the ATO need to encourage people to do the right thing. So they always come up with focus areas and they always pay marketing people to come up with a snazzy name, and it's called Get It Right campaign. It's very good. Don't even talk to me about MyGov and MyGov ID. I don't know who came up with that idea because it's so similar, but they're trying to come up with something that's really fun that, getting it right. Let's get it right. Let's pay for those submarines, right? So they're looking at areas that are under the scrutiny. And again, a lot of these ones are about us tax agents making sure that we double check this area for them as well. That's why I said we're their biggest resource by far, right? They sometimes don't treat us with that sort of respect, but we are. Our whole role is to uphold the tax system. I say to my clients all the time, I cannot reduce your tax bill, right? I really can't. I can make sure you pay the right amount of tax, and the only thing I can really massage is when you pay it. I can massage at the timing, which will help you with cash flow, but your tax is your tax.
Yeah, exactly. Your tax, the right amount of tax is what is calculated based on applying the legislative provisions and
exactly.
that. Obviously, there's the grey area of interpretation. There can be embedded choice within that, but ultimately the right amount of tax is what the law reflects. And it's the debate within the interpretation of the law that perhaps opens up
but most
some
of it's
challenges
vanilla,
there.
Lizzie. Most of it's vanilla, right? It really is. But what we're saying is, are you aware of these special provisions? And the Getting It Right campaign is a lot around anti-avoidance provisions. Okay, so, if you look at fundamentally for ordinary income, 6-5, it's assessable, 8-1, it's deductible, right? Then we go, what makes tax hard is the things that shouldn't be either of those. Or should be either of those. And so one of the big areas is Division 7A, which is an anti-avoidance provision. And Division 7A is all about taxing a private company that a taxpayer has an individual taxpayer has total control over. And remember, companies get taxed at 25 or 30%, depending on if they're a base rate entity or not. Where us individuals pay tax up to 47%, 45 plus Medicare levy. So that arbitrage of tax rate can create a little bit of mischief.
Yeah, and understanding that if you're an individual that's running a business via a company, it's the company that's making the profits. It's the company that is selling whatever the goods or services are that are paying for those expenses. So that separation really needs to be well understood and clear. But yeah, do you think on that note that if everything was a flat 30% tax rate, it would resolve a lot of problems?
Of course. I'm a big believer in trying to fix everything up so we don't have any FBT, because I think it's badly done. And the problem that you've got is most small businesses running out of a company, they don't make any differentiation between them as an individual and them as their company. They go, but it's my money. Of course I can pull it out of the company, Lisa. And I go, yeah, I know you can, because you've got access to the bank account, but that money's taxed at 25 or 30% and you're pulling it out. and it should have been taxed at 47% in your hands, and that's what it is. So they're really finding there's a lot of things like that happening, getting pulled out, and so they're saying, no, Div 7A is very, very badly managed for that. And it's an anti-avoidance provision, as purely as that, okay? And a lot of small businesses run out of companies for asset protection purposes because you've got the corporate veil, right? But that corporate veil is getting very much broken at the moment because directors, if you're a shareholder of a proprietary limited company, you're probably the director as well, and you've got director responsibilities where you're going to be up for the tax debt anyway. So that corporate veil is definitely getting pierced.
It gets very messy very quick. And so if we've got these small businesses with these amounts of gaps and these amounts of issues, there's a lot of concern there. Sitting behind the scenes. And
exactly.
Yeah, we'll keep on moving on. I'm sure there's more detail in that campaign, but I'm mindful there's a few more elements of the speech we want to just touch on. So just briefly, did Kirsten talk much about ATO payment strategies? Because often, like we've already been seeing the conversation coming around and around again to the actual ultimate payment of those debts. So what about the ATO payment strategies? What did Kirsten have to say?
Yeah, and that's really important because what they're looking at doing, if, as I said before, the biggest gap is from the GST. So it's very much around, and small businesses have trouble with cash flow, and so they go, well, can I have some sort of payment plan or something with the ATO for that? So a lot of it's GST, and a lot of it is under payment plans as well. So what they're looking at doing is, most small businesses, if you're small, you're paying your business activity statements on a quarterly basis. They're going to bring that down to monthly. Now we're all going as tax agents preparing BASs, going, that's more work for us. But what they're trying to say is that if we give you a smaller amount of money to pay more regularly, you're more likely to pay it.
Yeah, or if there's some perhaps fraudulent activity that there's less
going to pick it up earlier or whatever.
I mean, there's a lot of concern, particularly with that project, Protego with the GST, a lot of the issues, the GST, that fraud, GST taken from the system, by the time the wrongdoer is caught, they've spent the money, which is fundamentally
and that's all coming through with that. Exactly. So that's what we're looking at doing. So it's like engage early, go on payment plans earlier. Please reach out to them and try and help them as much as possible. Right? So that's what the payment strategy is all about. And the interesting thing, and I'm not sure exactly what this means, and the one thing she said was support for no capacity taxpayers to give them a dignified exit out of the tax system. I'm just not sure what that means. I'm just going dignified. I'm going, if they're an individual, there's only way to exit the tax system, but we won't go there. But I was having a bit of a laugh about that one. I'm not sure exactly what the ATO meant by that. But they're trying to engage early and making sure you don't put your head in the sand. Because that's one thing that happens with the tax system, Lizzie, that I've identified, is that you can manage anything to do with the tax system well if you engage early. Okay, you've got a much better chance. If you put your head in the sand, they're going, no, not going to happen. And that's with everything. Now, the interesting thing is, for small business, there's 638,000 payment plans on foot.
That's quite impressive.
That's huge, isn't it? Yeah, it's absolutely huge.
Wow. Yeah, no, that's quite fascinating. And I'm assuming majority of those are small business.
Yeah, that is just the small business one.
Wow.
Yeah, the majority of small business, it's just small business. Majority of small business, right?
Yeah.
And that's a lot. And that's basically the ATO working as a bank.
Yeah. No, that's
Simple
fascinating. So this probably leads nicely into contemplating, just again very briefly, the vulnerability framework and taxpayer relief that the ATO has been focusing on. So they've obviously recently developed a framework. What does it actually mean here from an administrative perspective and particularly for small businesses?
Well, they're looking at how, a dignified exit, if that's the right thing, but we're just saying how do the ATO actually manage repaying? What's going to happen? If if someone's had some sort of illness, hardship, or vulnerability, there's a big push at the moment about domestic violence and coercive control and all those sort of things. Like if through no fault of your own, act of God, famine, fire, flood, they'll work with you, right? And so they're looking at on what grounds, and they're trying to formalise the grounds for omission of general interest charge and shortfall interest charge. Now, their data disagreed with our anecdotal data of us being a taxpayer as well, right? Tax agent as well, right? So they're saying that they approved 76% of remissions.
Which sounds pretty good.
Which sounds great, doesn't it? And they remitted $2.6 billion worth of general interest charge and $1 billion of shortfall interest charge. This
which
is all data
quite
from
a substantial
which is
amount.
A huge amount. However, from small business point of view, we didn't have the small business stats. This is just large volumes of GSC remission. From our anecdotal discussion, this is where we're going, really? We pick up the phone and say, hey, my client's been in hospital, they lodge their BAS late, can you remove the failure to lodge penalty? And they go, no, sorry, right? But that never gets lodged.
Yeah.
And this is what's happening. So what's just happened recently is they're trying to formalise it.
Yeah.
Ruth Owen, the tax ombudsman, has put a lot of work together to try and speak to the ATO on tax agents' behalf, saying, this is what we're seeing in the small business place. Please help us help you with everything like that. And we're getting frustrated because, our anecdotal stories is we'll ring up for the wife, no remission. Ring up for the husband, they get it. And we're going, yeah, that doesn't work. So we want some consistency. So they're now changing the way, and it's just been released over the past week or so that in early January 2026, they'll have a more formal procedure for requesting remittance of failure to lodge and general interest charge.
Yeah.
And that's what we're getting to.
Yeah, so it sounds like that advocacy, and particularly with Ruth Owen's work in this space, there is some change and perhaps some improvements coming through. But I guess we'll have to wait to see how that actually plays out and how well that then clarifies or reduces those problem cases that you've been seeing through those anecdotes coming through. And hopefully we do have that kind of more considerate approach to taxpayer relief based on those concerns that have been obviously coming through the tax ombudsman and their role and that work behind the scenes there. So one last thing before we wrap up, and that's what we really started with actually, and that's where Kirsten Fish was talking about the digital transformation, a good kind of point to wrap up almost essentially where we started. What are your thoughts? What was she focusing in on that digital transformation?
Yeah, and it's making compliance easy. I remember, I would have said, Lizzie, 5 or 6 years ago, it might have been, I've been in some consultative forum, and everyone in the ATO had an English accent, and I'm going, what's going on here? They've all been seconded from the UK somewhere, because always moving to this no-touch tax return, and that's been on the cards for at least. I mean, you've probably heard about it as well. I mean, we're talking about probably a decade, I would say, that they've been moving towards that. But that's for individuals. So how can the ATO is looking at how can they make compliance easy for small business? Now, everything is done digitally now. It's very hard to manage any interactions with the ATO with paper. For example, you don't have to lodge your tax return digitally, but if you lodge it in paper, I think the delivery standard's about 60 working days or 60 calendar days or something. It's something outrageous. It's snail mail is not getting them. So it's all about digital. And even when you look at what's happening with everything, there's a lot more responsibility getting put on the digital service providers. So your Xeros, your MyObs, your QuickBooks, your Reckon, all those, apologies if I haven't been technology agnostic, but, that covers most of the colours of the rainbow that we look at, is that getting them to help the ATO collect the data and work through. Look at single touch payroll, for example, super stream, payday super that's coming through. All those things is how it's going to get done. So the digital transformation is not really the ATO. It's the ATO working with the digital service providers, which is the tools the small business pay for to make their compliance easy, to make their business running smoothly, to make their ATO compliance and their tax compliance easy.
Yeah, that digital toolkit is
exactly,
incredibly
and that's
important.
what's happening. Yeah, and that's what's going to happen. So it's going to be a lot more real time. And that's what we're looking at. So they're aiming to do automation to reduce errors, right? And they're looking at more frequent reporting, which is going to match your natural business decisions. And that's what's really happening with payday super.
Yeah,
we've had single touch payroll. You run payroll, you pay your employees at the same time. Now, instead of having the quarter to pay super, we're now saying pay your super on the same day as well, which is great for cash flow. And that's what they're doing as well. They're trying to manage cash flow. The ATO actually have a cash flow management tool. And I'm going, why did they do that? They're not management accountants. They're meant to be upholding the tax laws and collecting tax debt. Why are they doing a cash management tool? Because they've identified that cash flow is one of the biggest obstacles for businesses to pay their tax debt. So they go down that pathway. Okay. And again, what are they doing? They're moving from quarterly to monthly basis, as I said.
Everything's moving to real time, or the closer to real time.
Everything is moving to real time pre-filling, all that sort of thing. So we'll see more and more things. And there's more and more things happening in the SMSF space, the self-managed super fund space as well, where all of that will be a lot more real time as well. Just like the big funds, the big APRA funds have to do, the little mum and dad small self-managed super funds, the small super funds that you're allowed to have up to 6 members in, they're all going to have to be digitally and in real time as well. So it's just all that sort of thing that's happening, Lizzie, with it all. And I think that's a good thing. But again, they have to wait till all the old people die because everyone has to be tax native. I was talking to another tax presenter earlier on today, and he's about my vintage as well. And I'm going, we were talking about websites or something like that. And I said, remember, John, we're not digital natives. We've had to grow up. I mean, we had one little Apple IIe computer in my school when I was doing year 12, because it's the timing of, exams coming out and things like that. So we've had to grow with that. So we're now getting to a point where a lot of workers in the prime of their working career, like yourself, you're digital native. Digital stuff just happens now, and that's where the ATO will move towards it as well. And I think it can only be a good thing, because we do have to treat our tax debt, and I've said this a number of times to my clients, always treat your tax debt like you're in liquidation mode, not as a going concern. You've got to be able to pay, right? Because if something happens and your business shuts down today, you've got no income coming in, but you've probably still got some debts to the ATO in some shape or form and to your employees. And I learned that the hard way. I had the epiphany the hard way with clients during COVID. They just shut down and went, got all this money to pay, and they have no income coming in. How the hell do they pay it? Right. And so that's why I like the idea, and that's what's cash flow. That's why tax is cash.
Yeah. No, that's really fascinating. I think that's a good, perspective to take, particularly if you think about all the connected stakeholders, the employees, the staff, the families that are impacted by that too. That, the amount of people that can suffer and have issues when businesses go under. Like it's not a great thing for anyone for businesses to fail. So, hopefully this is a
and that's
good
non-collected tax debt, Lizzie. That's non-collected tax debt, right? Because it's sort of like, the number of time I look at fines and penalties and big amounts given to small business, I'm going, they're just going to go bankrupt. We're not going to collect that because it's been 6-7 years. Look at the time frame, because from the income year to a case that we look at, it's usually 6 or 7 years.
Wow.
When it gets there and the money's gone.
Yeah, that's it. And at the same time, ensuring that we're thinking about the vulnerability, those that are facing the digital divide, so don't have as good access to technologies. Those are not that don't have the skills or the ability to access even the internet or computers or things like that. We've got to just make sure they're not left behind at that same time. So having robust systems and holistic things, including contemplating that vulnerability framework and taxpayer relief, ensuring that that is working efficiently and effectively is really, really important as we go more digitally native, more digitally the more real time we get in that process of tax collection and administration. But on that note, we kind of wrap up our exploration of Kirsten Fisher's speech. Did you have any final takeaways that you'd want to end on before we finish up?
I think probably the only thing that we take away from it is that the ATO has fantastic amounts of data. And even though we have a self-assessment system, I think the ATO's got a fair idea of what the tax should be. Okay, so really you've got to make sure that you're declaring everything and doing everything above board and those sort of things as well. And I would also say go down your local suburban cafe and spend money locally to try and help these small businesses out as well, because they're really struggling. You can see how important they are to the economy and how much they're important to our whole tax system. And I think that's really important as well. And I think that really, really highlights where it's heading to that. What about you, Lizzie? What were your takeaways from Kirsten's speech?
Yeah, like I'm just, I guess it's a bit of a shock of just how significant the issues small businesses are facing and how tough it must be. Because even if you contemplate that there's probably egregious behavior going on in the mix, the majority are probably not doing not that category. They're just doing it tough. And so just considering that, yes, we have the tax admin system itself and we're closely examining that, but we actually have to look upstream. We actually have to look at the big picture, the community, the society that it's reflecting. And if we've got that significant debts, if we've got that significant issues in compliance, then what are the other issues that are more closer to heart that, aren't just considering the tax collection for government? I guess that's probably my consideration is actually look at the taxpayers, look at the small businesses. And as you say, it's about supporting local business, but it's also just appreciating the difficulty broadly that operating can be, particularly in the environment we've seen through COVID, post-COVID. It's pretty tough at the moment. Everyone's doing it tough, and you can see that coming through. So hopefully the ATO, contemplates really deeply that taxpayer relief story, the vulnerability story. But we also understand that if it's GST, it's not the taxpayers' money in the first place either. So we've got to actually also be objective at the same time. So it's that counterintuitive that it's, trading off or it's a difficult balance to make, that the ATO do have to do their job. It's the ATO's role to collect tax. It's fair for all taxpayers to ensure that is done appropriately and objectively. So I think it's a really difficult balance to meet, and I think it's really hard to make everyone happy or not feel like the ATO is making tough decisions that we don't like. Ultimately, they have to make those tough decisions. So I definitely have a lot of respect for the ATO and what they do and what their challenge is, given the difficulties over here we're facing in society. So it's not really a takeaway. It's probably more just a deeper reflection. And
well, that's sort of where it was coming from with it all. Yeah, absolutely.
Awesome. All right. Well, that's it for this episode of Taxed and Confused, where the rules are rigid, the paperwork is endless, and the burden of proof is all yours. If you enjoyed today's deep dive into tax admin, don't forget to subscribe, leave a review, and share it with someone who's just as confused as we are. And remember, this podcast is for education and entertainment purposes only. It's not tax advice, and we're not your tax agents. Thanks for listening, and until next time, stay curious, stay compliant, and stay just a little bit taxed and confused.